Hi, my name is Andrei Jikh. Hope you're doing well. Cover the finance and stay for the taxes. Taxes are my favorite, said no one ever. But there is a new proposal out today, and it involves taxing billionaires. And everyone has an opinion about that, and the internet is talking about it, so I wanted to make a video to talk about exactly what's gonna be in it, how this works, and even if you're not a billionaire, I mean, you could be and you're watching this video, but chances are you're not, this will still affect us in both good ways and bad ways. Now, this is unofficially called the billionaire minimum income tax, and there are two main reasons why we're talking about taxing the rich. Reason number one is because billionaires don't pay personal income taxes because they don't have to. They don't make their income the same way that we do. For example, in 2020, Elon Musk took a salary of just $0 for the entire year. Also, Larry Page and Sergey Brin from Google take only $1. Mark Zuckerberg takes $1. And the list of billionaires that do this goes on. And the reason they can do this is because most of their income is loan-based. In other words, they will borrow against their assets, and their assets are used as collateral. So they can borrow at a lower interest rate than the rate at which their assets grow by, so they get to make even more money. In other words, they'll go to the bank and they'll be like, I'm really rich, here's all my stuff to prove it. The bank's like, wow, you really are. You know what? You look like you could pay us back. Here's a fat stack. And they're like, and when the bank's like, I need my money back, all they have to do is just sell off some of their stocks and their assets, and that's how they're able to sell those assets at a lower tax rate. That's the capital gains tax rate, which is lower than the rate of personal income. And that's how they can pay less than the middle class. The second reason why we're talking about this and why this is so important is because just recently, if you remember, the world's largest publicly known Roth IRA account was exposed to be valued at roughly $5 billion, which is an ungodly amount of money. Let me put that in perspective because we hear that word a lot, $1 billion. But here's how much money that actually is. To save $1 million, making an average income of $50,000 a year would take roughly 20 years if you were to somehow magically save 100% of your income. But to get to $1 billion, it would take you 20,000 years of saving consistently. So to get to his 5 billion, it would take you 100,000 years, which again, I realize is silly because no one's gonna save that kind of money, but you'd be surprised how many people prefer saving over investing. So let's just assume and take a chance that we're gonna invest this money, starting with $6,000. Now, $6,000, remember, is the maximum contribution limit to a Roth IRA. So starting with $6,000, if we were to buy the S&P 500, the stock market, and expect a return of 10% every single year, it would take 143 years to turn 6,000 into 5 billion, which is just wild because Peter Thiel was able to do it in just 20 years. The reason people were so upset over this though is because the Roth IRA was supposed to have been a tool for the middle class to use to catch up to build some wealth by allowing them to invest their money in an account that allows them to withdraw the investments tax-free in retirement. But Peter Thiel figured out if he could just use that money to invest into high-flying growth tech stocks before they went public, he could make some buku bucks, which is why in 2001, he was able to buy PayPal at 30 cents a share inside of his Roth IRA, and when a few years later eBay bought PayPal for $19 a share, he was able to make $31.5 million completely tax-free. He was also able to buy Facebook and a bunch of other stuff inside of this tax-free account. And that's why there's a new proposal to make sure the richest of Americans pay at least some minimum. So here's the plan to get billionaires to pay their fair share in taxes. Families with a household net worth of over $100 million would be forced to pay a minimum of 20% on their personal income. Now, technically, if you have a $100 million net worth, you're not a billionaire yet, you're a tenth of a billionaire, but that's where the government draws the line, and that's how they're trying to target billionaires, which also means we're about to have a lot more households with a $99 million net worth. People that are making $99 million a year are like, whew, still part of the middle class, baby. Now, the Council for Economic Advisors recently estimated that 400 billionaire families paid an average federal tax rate of 8% between 2010 and 2018, which is lower than the average American family, which is what this bill is trying to fix. But there's there's also a good chance why this bill will most likely not pass. And this is the single biggest reason why people in this country can never agree on money and taxes. It's because we are looking at two different metrics and we can't decide which one is more important. Is it the amount of money in total paid that's more important? Or is it the effective tax rate relative to the individual that's more important? For example, if someone is making $100,000 a year and their effective tax rate was 33%, that person is paying $33,000. Now let's imagine there's someone else making $1 million a year and their effective tax rate was a lot lower, 10%. Well, that person would be paying $100,000 a year in taxes. Now, even though their effective tax rate was 3 times less, they are also paying 3 times more. Now, according to the National Taxpayers Union Foundation, it estimated that the top 10% of earners paid for roughly 71% of all taxes, and the top 25% of earners paid over 87% of all taxes. So which one is more important? I don't know. But regardless, some version of this bill will eventually someday pass. And when it does, here's what you need to know. The real goal of bills like these is to reduce the federal budget deficit, which, remember, is the amount of money the US spends in relation to how much it makes in tax revenue. This bill specifically is supposed to reduce the federal budget deficit by $360 billion a year over the next 10 years. But how much money is that though? Just to put in perspective, our federal budget deficit in 2021 was a grand total of $2.8 trillion. So reducing $360 billion over the next 10 years is not going to pay off the debt anytime soon. In fact, it would take us roughly 77 years at this pace to pay off our debt, assuming we didn't run any more deficits, which is almost impossible at this point. Now, the last time that our government tried to tax billionaires, it didn't fly, because the last time they tried to tax unrealized capital gains. For example, in the stock market, when you go to buy a stock, you only realize the profits once you go to sell. Other times, it's just moving up and down on paper and you're not making any money, so you don't have to pay any taxes. The last proposal required people to pay taxes on unrealized gains, which was silly because those gains could have been wiped out at any moment, because that's how the stock market works. Now, this bill specifically has a higher chance of passing than the last one, and if it does, here's who it's going to affect. This bill, if passed, will affect the top 100th% of Americans. Not the top 1%, but the top 0.01%, which affects roughly 700 Americans. Jeff Bezos will pay an additional $35 billion a year with this change, and Elon Musk an additional $50 billion a year. But I also think in some small way, it will affect the middle class. For starters, it's going to affect certain retirement loopholes. Unfortunately, only 1 in 4 millennials have a Roth IRA, but I think this will change soon. Just the other week, I was speaking to a company that allows people to put Bitcoin and crypto inside of a retirement account, which blew my mind, because traditionally we could only put traditional assets like stocks, bonds, real estate, things that grow, but not as much as crypto. And if crypto grows so fast and you could put it inside a Roth IRA account, imagine letting that money compound over time for 10, 20 years, pulling millions of dollars out when you're ready to retire tax-free. That's exciting, so I'll share that in a different video, but the point is, some of those loopholes will start to close. One of those mechanisms, for example, is something called the backdoor Roth IRA. This allows people who are making over $140,000 a year in income to contribute to a Roth IRA. If you didn't know, now you know. There's an income limit to a Roth IRA, which is also what makes Peter Thiel's $5 billion Roth IRA that much crazier. He was able to build it though because of something called the Mega Backdoor Roth IRA, which allows you to contribute up to $58,000 a year regardless of your income. So I asked this company if they could help me set that one up. And they told me just recently they were helping customers set it up. But ever since Congress started to pass around this idea of closing these loopholes, they stopped helping people. Now, I'm certainly no Peter Thiel. I'm not a billionaire and I don't have anywhere near $100 million, but I still could use that tax loophole. I still want to build my retirement account. And so could lots of other people that are business owners, that have employees that are not making $100 million a year, but they will be affected, which forces some of them to park their money somewhere else or find new tax loopholes, which is never a good thing. generally you want to encourage businesses and money to stay here in the US. Now, on the upside, if the government can use this surplus of new money to build infrastructure, then we'll have a better life. So there's pros and cons to both. Unfortunately, I'm not qualified enough to have a very strong opinion about this because I'm neither an economist nor a billionaire, but the optimist in me can see how increasing taxes on the wealthiest class can definitely help society in all the obvious ways we can all agree to. But the cynic in me kind of thinks all of this is sort of pandering in a time when pandering is very important for the political party to get re-elected. Because the cynic in me doesn't understand how this actually affects billionaire incomes if their income isn't made off the same way we make our incomes. Their incomes, remember, are based on borrowing against their assets. So that doesn't really touch that income, not loan-based income. Also, when we think about taxing the rich, we generally think with our emotions. We think of individual people that we may or may not like. People like Jeff Bezos. Everyone's like, of course that guy should pay more money. Of course. But those people who have $100 million a year businesses also have employees. That affects their bottom line. And if you assume that for every dollar a business makes, it gets to keep 10 cents in pure profit, by increasing their taxes by 20%, you keep 20 cents more, which means that business needs to make $1.20 to make that same 10 cents profit. Otherwise, they will find creative ways to either park that money somewhere else, another loophole, or they'll pass on those costs to consumers, increasing inflation. So the price has to be paid somewhere. So this bill shall not pass. Taxes are so complicated and there's so much I feel like I don't know that I don't have a very strong opinion on them, but I still try to consider everyone's perspective regardless of their position. But I also know that people are very opinionated when it comes to taxes. So let me know down in the comments below what you think I missed, and I'd love to hear your thoughts. In the meantime, have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. I will see you back here on Monday and Friday, sometimes a Wednesday. Don't forget to grab up to $250 worth of free Bitcoin with this BlockFi link right here. Get your free stocks, all the links down below, and then go track them automagically with the spreadsheet link down below my Patreon. Love you. I'll see you soon. Bye-bye.